Let's get a little bit more bearish with Tony Zhang. Get straight into some trading. He's the chief strategist at Options Play. Tony, shots on goal. Short in tech has been a pretty good place to be the last month. Looks like you're ready to fire again on Microsoft.
Yeah, that's exactly right. This comes on the back of my trade a couple of weeks ago on Apple, really looking at these big tech names that are trading at pretty lofty valuations given the fact that where 10-year yields are. And, since we've spoken last week, 10-year yields are up another 20, 30 basis points. So when we're looking at this, when 10-year yields at a 4.5% environment, the valuations that these tech names are trading at are just hard to get your arms around. If you look at Microsoft, we're trading at 29 times forward earnings, and you look at what analysts are expecting, looking at about 11% EPS growth, which I think is fairly modest given the valuations that we're currently trading at. That was the same problem that I had with Apple. It was trading at 27, 28 times earnings while expecting 9% EPS growth. And that's EPS growth in terms of analyst expectations that I think at this point is looking a little bit optimistic for next year. I think there's a good possibility that that is likely going to slow down materially. Whether you're looking at consumer spending or looking at enterprise spending, there's certain signs of deceleration in both of those categories. And I think that when you take into account the interest rate environment, the valuations they're trading at, the fundamental picture here is not particularly attractive for net new long positions in these types of tech companies that have led this market rally. And then you look at the technical side here, you see Microsoft. And, Apple hasn't broken that 172 level, even though we're just trading against that support level here right now. But Microsoft earlier today broke that 320 support level. So you have some major support levels that are starting to break. Microsoft downside targets here to the downside, in my opinion, right now is still fairly modest, around 290 or so. Now that we've broken that 320 level, if we break 290, things really get ugly. But at least in the short run, in terms of Microsoft, I think the short-term target here to the downside is roughly 290. And I think that puts it, Microsoft back into that 26, 27 times forward earnings, which probably is a little bit more manageable in this type of interest rate environment, because it is still arguably one of the best performing tech names overall as an investor. So I don't think that this is the type of stock that, should be trading at 22, 23 times forward earnings.
And you're also not going straight for the short either. You're selling upside, right? Selling a call spread, call vertical?
Yeah, I did set this trade setup before we broke that 320 support level. The idea was that, this could break today, it could break 2 weeks from now. Right now, at the time, I think with the high implied volatility was to sell premium. Earlier today, I was looking at selling the November 3rd 320, 340 call spread. You would collect about $7.60 earlier today. I think if you were to adjust this trade based on current prices, I would move those strike prices $10 lower to that 310, 330 put call spread. You can collect a little over $8 for that $20 wide credit spread at the moment. That's more than 40% of the vertical width, which is certainly very attractive. However, I will say the fact that we've broken that support level gives me more confidence to be outright short and being a bit more aggressive in my shorts, looking at buying some put spreads. But this is the same trade setup that I spoke about a couple of weeks ago with Apple, where we're selling upside call spread. And I said, if we break that 172 level, that's when I'd be getting more aggressive and buying puts.
Yeah.
Here's an example where Microsoft, when we were talking earlier today in the morning, I was selling call spreads saying that if we break 320, I'd be buying put spreads. And here in the afternoon, we're already at that point already.
Okay, so Microsoft, you're ready to even get more short. Apple, you're looking for full breakage to then, we're at 171.68, so we're kind of borderline on that right now. But if we go down further, you think Apple's got room to go lower too?
Significantly lower on Apple, about 155 to the downside. Microsoft, I think
That's
about
painful.
290 to the downside right now.
Market's going to hurt if Apple gets to 155. You think you get better bang for your buck trading the stocks than the broad market in that case? Tony, might there be some other stuff that helps support the S&P if these companies break down, or is S&P toast if these trades work out?
I think that's a great question, but we really think of Microsoft and Apple nearly as proxies for the market. They trade at a slightly higher beta than the market, but from my perspective, either you're using this as a tactical short if you don't own Microsoft and Apple, but I would imagine most viewers here have some level of Microsoft and Apple exposure in their portfolios. So this could also be used as a potential hedge against stock that you own. But also, whether you use this as a hedge for the market or you use something like SPY or QQQ, the nature of the trades are very similar. The betas on these stocks relative to the market isn't too extreme. 1.2 on Apple versus obviously 0 for the or 1.0 for the market. So you can think of this either as a tactical short or as overall hedge for individual stock, or even as an overall portfolio hedge, in my opinion.
All right, good stuff. Like the context too about how to approach it versus the index, helpful, and nice trade on Apple. We'll be watching Microsoft next for the breakage. Thanks, Tony. Options play.